Greetings, this is Dwayne from CFRN. Today is, quite frankly, it's Sunday morning, February the 17th, 2013. I'm up working late or up working early, depending upon where you're at around the globe. And our partners are around the globe, and those of you who are coming to take the free trial are from around the globe. And so, it really doesn't matter what time it is here. I want to make a short video tonight or this morning, however you want to call it. I want to talk about the yen. The yen is something we've only begun to trade here in the last few months. Turns out it's been a pretty good trading vehicle. We've had to look at different markets for trading because the S&P, for those of you who are S&P traders, know that the range has become incredibly tight and restricted, and if we want to be active day traders, we have to go find where there's some activity. The yen happens to be one of those places. Now I'm going to go over, I scrolled my chart back to February the 3rd, not for any particular reason other than when I scrolled back, that's how far it went without loading additional data. And I'm not trying to make any huge point other than to show you some of the opportunities that are available trading the yen. Now, for those of you who are our partners already, or you've taken our free trial, you know that in the live trading room we use the same trade setup with the same indicators in every market, trade after trade after trade. I got a couple of emails today because we have a special offer right now for folks who want to come, who took a free trial in the past, and maybe they didn't really pay attention, or they didn't get a chance to download the platform or the indicators, and so they want to take another shot. And this time they say, I'm really going to focus and I'm really going to download the platform and install the indicators because I really do want to learn to trade for a living. And I really would be happy if I could just make the equivalent of 2 points in the S&P every day. Now, you hear us talk about 2 points. We used to only trade the S&P, so there was no confusion. But now, because we trade crude and gold and a lot of different markets, soybeans, the yen, the euro, we still talk about 2 points. But let me just clarify, when we say 2 points, here's what we're talking about. We're talking about $100 per contract profit, period. Let me say that again. 2 points in the S&P 500 Emini futures pays $100. Now, if you lose 2 points, let me just say this up front. Trading's risky. It's not for all people. You can lose all your money. You should consult with a licensed investment professional before you, undertake trading as a profession. You really should. So, because we're not licensed investment advisors, I'm really not required even by law to say that, but my good conscience and the fact that I answer to a higher power makes me want to say that. Because what I'm going to show you here is going to make you really excited, and you're going to be hot to trot. You're going to want to go out there and just, take all your savings and go trade the futures. And I'm going to be the first guy to tell you, don't do that. Don't do it. I don't care how good it looks here, okay, or how good it looks somewhere else. You go slow. You trade in a simulator. You get profitable in that simulator consistently before you put live money at risk in the market. And then when you do make that transition from the simulator to the live market, you only trade one contract. And you'll never trade 2 contracts. If you follow our method, you'll never trade 2 contracts until you've made enough money trading 1 contract to earn you the right to trade 2. And you'll be stuck at 2 for the rest of your life until you earn enough money in the market trading 2 to give you the right to trade 3. Now, I said our goal is to make 2 points, or depending upon the market we're trading, whatever it is, it works out to be $100 per day per contract. And you, of course, think, well, gosh, that's noble, but I can't pay my bills with $100. I can't. Okay, fair enough. We understand that. But that's based on one contract. Okay? Over time, as you earn money in the market and are able to increase the number of contracts you trade based upon money you earned in the market, then there's a progression. Okay, you add contracts until you reach some level where you're comfortable, and maybe you continue. We have a guy who's going to be on the radio probably next week or the following week, Michael X. He's been on the radio a number of times over the last few years. If you go Google CFRN and then Michael X, the podcast with him will pop up. This is a guy that trades 10,000 E-mini contracts on an average day. 10,000. He's like a one-man institution. He owns a seat on the exchange. He's an anomaly. But you know what? He's a nice guy. We don't bring it. If he were the type of guy that pounded his chest and bragged about his exploits, we would never invite him on the radio program. But he's so mellow and so calm, and he's just a nice guy. And to just know someone who trades in that kind of size is fascinating. It's almost like the wet paint sign. You want to touch the wall to see if the paint really is wet. I mean, you want to talk to this guy just to see if it's real, and it is real. But you and I, in all honesty, we're probably never going to graduate to trading 10,000 contracts a day, and we shouldn't even allow that to cloud our vision. Let's get profitable trading one contract a day, and then once we make $1,000 doing that, then we up it to 2, and then when we make another $1,000, let's up it to 3. Why $1,000? Well, because intraday margins are $500 to trade not all of the E-mini contracts, but some of them. The S&P, the Dow, the Nasdaq, the Russell, those are $500. When you get into the yen and the euro and crude and gold, now those margins, even intraday, are a little bit more. Okay, but when you've earned $1,000 in the market trading one contract, we believe that you've earned the right to bump it up to 2. Now, if you make $100 a day on one contract, after 10 days, that's 2 weeks, you've made $1,000. Now you go to 2. Well, because you're trading 2 contracts, making $100 a day, it's only going to take 5 days to earn $1,000. And then once you go to 3 contracts, it's only going to take you 3.5 days to earn $1,000. And then once you go to 4 contracts, this thing snowballs quickly. So don't be in a hurry. Don't ever think, oh, well, I don't have time to wait around, all that. I need to just get busy and make a lot of money. Famous last words. Don't do it. Okay? You got to be patient. If you don't hear anything else I say in this video, hear me say be patient. Market's not going anywhere. It's been here for years. It shows up for work every day, even when you don't feel good. You got the sniffles, you're a little nauseous, or you stayed up too late. No worries. The market's going to go to work. It'll work without you. And you know what? The following day, you don't have to show up feeling guilty, walking the walk of shame because you missed work the day before. The market is not mad. It didn't miss you. It's not upset. It's not angry. It's happy to do business with you. Okay? That's kind of nice. All right. Enough of that. I've burned up 10 minutes just talking about the market. Let's look at this Japanese yen. The Japanese yen pays, right here, I'm going to Wikipedia, the Japanese yen pays $12.50 per tick. Okay? What's a tick? I'm going to bring up a DOM. What is a DOM? A DOM is the platform that you use to execute your trades on. Now the markets are closed, so this isn't moving right now. But as you can see, 0.012, 11, 10, 009, 008, that's a tick. When it moves from this position to that position, that's a tick. Okay? Now, with our system, the one that we use in the mornings in the live trading room, we're using a 4-tick range chart. Don't confuse that with a 4-tick chart. A 4-tick chart is a very fast-moving animal, and that would be literally impossible to trade. A 4-tick range chart, every one of these candles, from the low to the high, or from the high to the low, is exactly 4 ticks. Okay? Every single candle. Now you might go, well, why would you want to do that? Why don't you want a chart that's based on time, or transactions, or volume, or any of the more common ways of measuring market movement? Well, the market is filled with options, and so this is an option that we've chosen. We like the 4-tick range because if it opens down here and starts to move up, we know exactly where that candle is going to close. We know exactly where the next candle is going to open. How do we know this? Because every candle is 4 ticks. Okay? Well, what's the benefit of that? Well, if based on our trade setups, and I'm going to show you in just a second here, as our trades are setting up, our trades are so simple. It's a 4-step thing. And I'm going to show you each step. Part of the equation, part of the 4 steps, is to look for an up close or a down close. I'll show you what that is. But if we get that down close, we already know at what price the next candle is going to open if we get that down close or that up close. And so we're able to bring out our DOM and be ready to take action so that we don't get slipped, other than what normal slippage you might experience in the market. Okay? All right. The first step, step number 1 on this chart, is what we would call a bullish cross. What is that? It means our primary indicator, the CFMA1, that's the red and blue indicator that you see on your screen. When that crosses the green line to the upside, see how the blue line crossed the green line headed north? The green line is called the BBC. That is our bullish bearish cross line, the bull bear cross. Okay. This is a bullish cross. Why? Because the blue line crossed the green line headed north. Now you're probably already thinking, good Lord, I can't remember all that. Well, you can. In fact, we'll give you a little chart where it's just numbered, because there's only 4 things you got to remember. All right? So don't get overwhelmed. Don't think you can't remember it, because you can. All right. So step 1. We need the bull bear cross. Okay. We got it. Next, we need price to pull away from the BBC. We got that. Now, why do we need price to pull away from the BBC? We need the price to show us that it has, because this is a bullish cross, so we're going to be looking to be long the market. We're going to be buyers. Over here in a minute, I'll show you how we become sellers. Okay? Bullish cross, number 1. And then price has already pulled away from the green line, the BBC. So number 2 is already taken care of. Number 1, the cross. Number 2, the pull away. Step number 3 is what we call the pull back. Okay? And right here, we get the pull back. Now, I said this was 4 steps to Emini success on the blog, right? Step 1, bullish cross. Step 2, price pulls away from the BBC. Step 3, price pulls back to the BBC. We get an up close on this candle right here. Okay. What do I mean by an up close? We're looking to go long because of the bullish cross. On a bearish cross, we're looking to go short. Bullish cross, we're looking to go long, right? So once we pull back to the BBC, we want to see a up close. In other words, a bullish close, a green candle. On Michael's charts, his bullish candles are blue. Same thing. So when you go look at the recap videos, and by the way, we have several years of recaps here on the chart, on the site. You can go look at them. We spend 2 hours trading in the live trading room in front of a live audience. And then during the radio show, we spend about 20-30 minutes recapping all the activity from the trading room. Okay? So, in this particular instance, we want to get long at the close of this candle. The close of this candle would be, let's see, the close is 10,790. Now, I'm not going to do this on every trade because it would take forever. 10,790. Okay. All right. Now, remember, we determined over here by looking at our little chart, the Japanese yen will pay you $12.50 per tick if you're on the right side of the trade. If you're on the wrong side of the trade, it's going to cost you $12.50. Okay? So, we want to be long at 10,790. Why? Why do we want to be long at 10,790? Because we had a bullish cross that says we want to get long. Price pulled away from the BBC. Price pulled back to the BBC, and we had the bullish or the up close. So that's where we get in. We know exactly to the tick where we want to get in. There's nothing nebulous. There's nothing like, well, you know, kind of in this area, you know, sort of where we'd like to be getting long. That looks pretty good. It's kind of a nice setup. No. Okay, there's no ambiguity with what we do. You may have tried to trade subjective methodologies in the past where there was a lot of ambiguity, where you never really knew exactly when you were supposed to get in the trade. We know to the tick every single trade. We know. Okay? All right. Off we go. Price puts in a swing high up here at 10,815. Okay. 10,815. Okay. Now, rather than have to tax my brain, I'm just going to go on my calculator. 10,815 minus 10,790. That is 25 points, 25 pips, 25 ticks, whatever you want to call it. Okay. From this entry to this swing high, 25 pips. What's that in real money? Well, it's very simple. We've already established the fact that on the Japanese yen we get paid $12.50 per tick, pip, or point, whatever you call it, if we're on the right side of the trade. So let's go 25 times 12.50 equals $312.50 US. $312.50 US. I should clarify that and put in per contract. Because remember, you're only going to start out trading one contract. Not two, not three. You might go, well, you know, I got 25 grand that I've saved up to go into this trading business with. You know, why don't I just trade 10? You know, get a jump start on this thing. Please, I beg you from the bottom of my heart, don't do that. Okay? Start with one. Build your business with a solid foundation, one step at a time. Okay? So, from the entry, which we knew the entry price to the tick because 1, 2, 3 steps were made. The fourth step was the up close. Bullish cross, pull away, pull back, up close. Let me put the number 4 in there because it is a 4-step process. Okay. Let's get number 4 right there because that's where it is. Okay. Number 3 is actually right there. Okay. 1, 2, 3, 4. It really is 4 steps. Okay. If you don't get the 4 steps right, well, the success part may change. And not every trade's gonna, you know, this is a picture perfect thing. I rolled it back, it laid up a picture perfect trade. If you go watch our recaps, you'll see that many days, the first trade we take every morning, we meet our daily goal of 2 points per contract, and if we were just ordinary traders, we'd be done. We are ordinary traders, but we're also teachers, and we've promised our partners that we're going to teach them for 2 hours a day. So once we hit our daily goal for the day, we continue to take trades and teach. But if this was the opening trade of the day, we'd be done, because we made 3 times our daily goal on this trade if we had stayed in it all the way up to the swing high. But you know what? Once price closed up here above this CFMA1, all right, we're going to be tightening up that stop. And once this thing starts to climb, we're going to get our stop to break even plus a tick, so that if price comes back and stops us out, that plus 1 tick is going to pay for the commissions on the trade. So as quickly as we can, because we teach aggressive risk management, as quickly as we can, we're going to get our stop loss to plus 1 tick. So if price comes back and stops us out, it doesn't cost us anything, doesn't cost us commissions, the trade pays for itself. Now, of course, we want to see a profitable trade, but we also want to manage the risk to the best of our ability. As a new trader, preserving your risk capital is your #1 priority. You got to stay in business long enough to learn the business, okay? So, will you get stopped out a lot of times plus 1 tick? Yes, you will, and there's nothing wrong with that. That means you're doing an excellent job of managing your risk. You're preserving your capital, okay? Preserving your capital will keep you in business. If you can stay in business, you can learn the business. If you can learn the business, guess what? You can become a trader. I got news for you. Just because you have money in an account somewhere does not make you a trader. Let me say that again. Just because you have money in an account somewhere does not make you a trader. It makes you somebody who has money in an account somewhere. Don't want to, bum you out or burst your bubble or rain on your parade. But I do want to hit you with a dose of reality, because there's a huge difference between being a trader and being someone who has money in an account somewhere. So is there a chance that we'd have been so aggressive with our risk management that we would have got stopped out before we hit 312.50? Okay? And would we have been clever enough to get out at the exact peak swing high? Probably not. What might have happened is when we got this close back below the black line right here, okay, that close below the black line was 10.807. All right, let me just put that on the screen for a minute. 10.807. Okay. So let's say that we actually got into the trade where we got into the trade at 10.790. Now let's say that we got stopped out, not at 10, that we didn't take the perfect profit at 10.815. Let's say that we got stopped out via aggressive risk management at 10.807. So 10.807 minus 10.790. That's only 17 pips, ticks, points, whatever you want to call it. Okay? Is there any shame in that? Not in my book. 17 pips. All right? Now if you take 17 pips times how much per pip? That's right, $12.50. It's $212.50. $212.50. Okay, so had we done the miraculous and got out at the perfect swing high, 25 pips, $312.50 per contract. If we were more human, we got out with $212.50 and 17 pips. And if we were just like total nervous Nellies and maybe got out way back down here at 10.803, let's have a look at that. 10.803. Okay, so let's go 10.803 minus 10.790. That's only 13 pips, my friend. We've gone from 25 to 13. We've reduced the potential profit there by 50%. Is there anything wrong with that? Not in my book. Okay. See, we're being very aggressive with our risk management, so we get stopped out here. Okay? Because we're moving that stop up. We're trailing that thing, man. Boom, we get taken out right there. Okay. So we only get 13 pips on that trade. 13 times $12.50. It's $162.50. Is there anything wrong with that? Not in my book. Because remember, our daily goal, okay, is $100 a day per contract. So worst case scenario, this was good for $162.50. A little better, $212.50. Superman trade, $312.50. But let's focus on this, okay, $162.50. And let's say we didn't even do that. Let's say that for whatever reason we just got out, we just made $100. Now this particular trade triggered in at 31 hours, and it ran to 2015. So this whole move took about an hour, okay? But it's at night. Look at the time down here. That's military time. In the morning, when the markets are jumping, that trade would have probably lasted, 2 to 5 minutes. Maybe less, maybe more. But if it takes an hour, it takes an hour. People ask us all the time, hey, I have a day job. Can I do this at night? Can I trade at night? Can I get up early in the morning before I go to work and trade the Globex, trade the European London Open? Can I do that? Can I trade the Asian session at night? Well, that's what this trade is right here. This is an Asian session trade. Now, 162.50 per contract on this trade. That's what you got, fine. If you just bailed with your $100, no problem. Again, $100 is not a huge sum of money. It's not going to pay all your bills. It's not going to pay your mortgage and your car payments, send your kids to college. But if you'll be patient, stay in the simulator till you're consistently profitable and only increase the number of contracts you trade with money that you earn in the market, over a period of time, with focus and discipline, you may be able to work your way up to trading 10 contracts. Again, just because you have money in an account that would allow you to trade 10 doesn't mean you should do it. Quite the opposite. You need to earn the right to trade 10. Okay? There's no way to trade less. If there was a way to trade less than 1, I would tell you to trade less than 1, but you can't. 1's the smallest denominator for trading in the futures market. You got to trade 1. If I could get you into a half, I'd probably do that. But so you start with 1, you work your way to 10. Okay? This number times 10, I'm not going to do the math for you. I'll let you do the math. 162.50 times 10. That's from this entry right here, okay, to right here. No, that was the 17 pip entry. Let's see what we got in here. You get my point. Okay, we picked 3 entries here. The total swing high gave you 25 pips. The getting out at 10.803 gave you 13 pips. Okay, and then getting out with 17 pips right here. That's the one that gave you 212.50. Okay. So now that's only one trade, and I've spent 32 minutes going over one trade. This is why I don't make a lot of the videos and I leave them up to Michael, because Michael can recap an entire 2-hour trading room in about 20 minutes, and I drag it out over a half an hour. You know, maybe that's why he and I are in business together, because although we have the ability, like a couple of an old married couple, we can finish each other's sentences. We're very different in many ways of thinking and our approach, and so we balance each other. So for those of you who go, man, Michael, he moves so fast, I can't even keep up with that guy, he's from market to market. Well, and then here I come along and I just plod. I just plod. Alright, I want to say this. I'm not going to drag this video out any longer. I'll show you one short trade, and then I'm just going to end this video right here. You can email me, support@cfrn.net. I'd love to answer any questions that you have. Okay? And I'll go over more charts. I'm going to try to do at least one video a day, cover a couple trades. I wanted to go all the way from the 13th. Or no, what day did we start here? Yeah, when I started this video, my goal was to go from February 13th all the way up to yesterday, or Friday, which was February the 15th. I was going to cover 12 days, and I actually made it through one trade. I'm sorry. I'll get better. I've only been doing this for, you know, a long time, but if I keep trying, I'll get better. I believe that. So, some of you, when you come into the live trading room, because we have a special offer right now that we're just literally giving everybody that wants a second chance to come take the free trial. We're just kind of putting it out there. Why? Well, because we want you to succeed if that's what you want. We want you, if you want to build an E-mini futures trading business, we want to help you. We really do. We've been there. Okay, we know what it's like to be out there in the cold trying to figure this thing out. You can't get any help that has any integrity behind it, you know. Oh, no, let me take that back. There's plenty of people out there with lots of integrity. Sometimes it's just hard to find those people. Okay, let me say it properly. We struggled together, he and I. I mean, we met over the internet. We met over our struggles. We became friends. We began to work together and trade together and do radio shows together. And here we are, you know, 8 years later, 7, 8 years later, doing business together. Okay, because we have common ideals, common goals, and part of that common goal is to help you build a successful E-mini trading business. Okay, so because we have that offer right now, I got a ton of emails today that says, man, I took the free trial the first time, you know, or I've taken the free trial before, but that guy, he moved so fast I couldn't keep up with him, and he was jumping from market to market to market. Now I want to say this, he has, if I don't know how long it's been since you might have taken your free trial, he has slowed way down. Way down. Not as slow as me, but really slow. And yes, if there's a trade setting up in the NASDAQ, he's going to jump over there. If one of the partners goes, hey Michael, gold's setting up, he's going to jump over there and trade that. If one of the partners says, hey Michael, the yen's setting up, he's going to jump over there and he's going to trade that. What I want you to understand is that you're not there to learn how to trade gold or the yen or silver or the S&P or the Dow. I'm not. That's not why I'm here. No, it's not. You're there to learn how to do this. To load up a 4-tick range chart, any market, it doesn't matter what it is. Corn, soybeans, cotton, copper, natural gas, doesn't matter. Your job is to load up a 4-tick chart. Your job is to wait for number 1 to happen, for number 2 to happen, for number 3 to happen, and then last but not least, your job is to execute on number 4. Your final job is to exit the trade once you've made your daily goal. If this trade doesn't give you your daily goal, your job is to aggressively manage your risk so that if the trade doesn't take you to your profit, it doesn't take you to the cleaners. Okay? We always trade with a hard stop. Using this trade setup, we never risk more than 8 ticks on any one trade. Doesn't matter if it's the yen or natural gas or gold or corn or soybeans. 8 ticks. That's it. That's how good this setup really is. You don't need to risk more than 8 ticks. Okay? So if you get stopped out on this trade, now this was a beautiful trade, but if you would have gotten stopped out, it's no problem. You flip right around, you take the next setup that comes. That's one of the biggest things we teach you. So what I want you to do when you come into the live trading room, you're taking your free trial, I want you to get that whole thing out of your head about I can't keep up because he's jumping from market to market to market. He's not teaching you how to trade a market. He's teaching you how to trade a setup. Okay? Now, by jumping from market to market, we're able to show you in the span of 2 hours, because the live trading room is open every day from 9:30 a.m. to 11:30 a.m. During those 2 hours, by using multiple markets, we can show you this setup live in real time 5, 10, 15, maybe even 20 times over the course of 2 hours. If we were just staring at the S&P or just staring at the yen, you might get to see 1, 2, 3 trade setups a day. Think about this, your learning curve. How much is it shortened by the fact that you get to see 20 trade setups and executions every day? So by the end of a 5-day week, maybe you've seen 75 or 100 trades. Some went to target, some got stopped out, some were called because of rain. Okay? You see the difference? You might come in and go, well, wait a minute, that dude's trading crude. I don't want to learn how to trade crude. I'm an S&P trader. Okay, that's fine. Watch him trade the crude, because you're going to use the exact same setup on the S&P that he's using on the crude, or the NASDAQ, or the Russell, or the Dow, or whatever. Again, what you're there to learn and on your free trial is to spot number 1 when it happens, number 2, number 3, and pull the trigger on number 4. Trail your stop manually until you either hit your target and or get stopped out. That's it. That's why you're there. And that's what we're going to teach you. And that's our commitment to you. We're going to let you come into our live trading room, watch us trade real markets, real money for 5 days. We're going to let you use our indicators. We're going to let you use our platform. We're going to teach you how to use our indicators and our platform for 5 days. We're going to answer every question you have during those 5 days. And guess what? We're not going to charge you a dime for that 5-day period. Not a dime. If at the end of 5 days you go, hey guys, it's been real, I appreciate it, I don't think I can do this, it's not for me, it's not my style, I'm not ready, okay, no harm, no foul. We still want you to come and hang out with us every day during the live radio broadcast. We want you to be a part of our community of believers who trade for a living. And when the day comes, when the time is right, that you do want to begin to actually trade actively, then you can become a partner then, okay? God willing, we'll be around, okay? Now, 42 minutes it's taken to explain that in one trade. Now let's see if we can just go through one more trade really quickly. I've got a lot of stuff on the screen, and if I, let me do this. Let me do that, and that, and that. Just kind of clean things up a little bit. Okay. All right. So, number 1 was a bullish cross. That means we're going to go long. We're going to buy the market if there's follow through. Over here, we have the opposite. The red line crosses below the green line. It's headed south. Think of this as your compass, okay? Blue and headed up, it's going north, you're a buyer. It's red and heading south, you're a seller, okay? You cross that green line, you just went from being in buying territory, you're now in selling territory, okay? What's the first thing we need? Do you remember? It never changes. Number 1. Okay? Do you see number 1 right there? The bearish cross. This was a bullish cross. This is a bearish cross. What's the next thing we need? We need number 2. Do you remember what number 2 is? Do you remember? Because we've got it right here. Kind of hard to see, but it's right there. Let me get this out of the way. You see that little bit of space? You see that? That's what we call the pull away. Price itself pulled away from the green line. Got to have that. It's critical. Without it, you don't have a trade. Next, we need number 3. Do you remember what number 3 is? Remember, we need the bearish cross, the opposite of the bullish cross, because we're going to be sellers on this move. The cross, the pull away, What's number 3? The pullback. Okay? It never changes no matter what market you're in. Gold, silver, yen, corn, soybeans, S&P, Dow, Russell, NASDAQ, doesn't matter. 1, 2, 3. 1, 2, 3. Okay? Now, what do we need? We need a down close. Now, some would be more aggressive and take this down close right here. Okay? You see this right here? Is this a nice clean down close even below that MA1? Isn't that just beautiful? I don't know. Maybe you can't feel the love the way I feel the love, but I gotta tell you, I feel the love. Now you know I'm joking with you a little bit, right? Okay. Here's number 4. As Emerald would say, bam. Alright? Now I got to get this out of the way for a minute to catch that price. Okay, the close of that candle is 10,798. So let me put that on my chart. 10,798. Okay. Okay, so there's my down close. Alright. Now this first swing low right here goes all the way down to 10,783. $10,783. Okay. You see that close right there, the bottom of that candle, that's 10,798. This swing low right here, it's 10,783. So let's grab the calculator, do some fast math. I could do it in my head, but why bother? 10,798 minus 10,783 equals 15. Pips, ticks, points, whatever you want to call it. Now, nothing's changed. The yen still pays, if you're on the right side of the trade, $12.50 per tick. If you're on the wrong side of the trade, it costs you $12.50 per tick. Okay? So we're going to go 15 times $12.50 equals $187.50. That's $187.50 US per contract. This little move from here to here. This trade is identical to this trade. This was a bullish trade. This is a trade where we bought the market because we had a bullish cross. This is a trade where we were sellers, okay? We had a bearish cross, and so we sold the market. The market made $187.50 available on this move. Over here, the market made $312.50 available on this move. Now remember, we're not trying to catch highs and lows. We're not trying to, nail the top or nail the bottom. We're just looking to scoop a little bit out of the middle. We're waiting for our setup to come together. Now, I assure you, and I'll show you in the next video, I'll trade crude or soybean. I'll trade some other market, but I'll do it exactly the same. 1, 2, 3, 4. Oh, bearish cross? I better get on my selling hat. 1, 2, 3, 4. Oh, I left out the slingshot. Did I do that on purpose? Well, what do you think? Okay. With the slingshot, we have this little thing called divergence. Okay. I'm not going to go into that in this video. I'm going to encourage you to come to the live trading room and let Michael talk to you about divergence. I can tell you this, divergence makes for pretty powerful confirmation on a trade. Okay. It's way beyond the scope of this video and what I can explain to you, but it's not something I want you to get concerned over, because he's going to explain it to you a couple times and you're going to have it. Okay. So here's 2 trades. I picked them at random. I just scrolled my chart back, grabbed 2 trades. I'm not cherry picking. This thing goes, if I just scroll forward, I'm not going to do another trade because it'll take me forever. Okay. Here on this, we had a continuation trade. We pulled back up. There was another trade right here. We pulled back to the BBC. We got a bearish close. We broke this trend line. And this thing went from 10,794 all the way down to 10,783. Now let's see. Let's see, 10, the low here, 10,794. No, let me give you the right figure and then I'm going to stop. The low was 10,7. The close, that's what I want. The close is 10,790. 10,790 minus 10,783. Do it one more time. The close is 10,790. 10,790 minus swing low 10,783. Wow. Okay, this is why I write it down. The close was 10,790. I'm just going to write it down. Okay. Swing low 10,783. You know what, that's not right. This candle here closed at 10,790. The swing low of this candle is 10,779. Okay. The swing low 10,779. Okay, so what is that? I can do that in my head. It's 11 pips. Okay. 11 pips. 11 times 1250 is 137.50. Okay. Once again, your daily goal, or our daily goal. That's all we look for, is $100 per day per contract. Now we keep trading during the live trading room because we promised the partners and people taking the free trial that we would trade for 2 hours, so you can see this trade setup unfold over and over and over. Now you're probably wondering, well, when do you use a different setup? We don't. Do we have other setups? We do. If you become a partner, will we give you tools and teach you how to do the other setups? We will. But we're not going to teach those to you before you become a partner. Why? Because it gets complicated. This is too simple. Why do you want to mess with this Incredible simplicity. 1, 2, 3, 4. 1, 2, 3, 4. Now look over here. Bearish cross. I'm not going to count these numbers because this will take forever. Bearish cross. Pullback. Down close. You can even wait for this down close. You can even wait for this down close if you want. If you want to be more conservative. This goes from 10,780 all the way down to 10,735. That's 45 pips. 45 times 1250. It's like $500 per contract. Okay. Look at this next move. Well, you don't get your pullback. See, there's 1, 2, 3, 4. You miss a lot of this move because you never get the pullback. Now, do we have a way to trade that and take advantage of it? Yeah, we do. But we're not going to teach you that really on the free trial. Wait till you become a partner. First, we want you to learn how to do this. Okay. Now, this looks a little crowded and busy, but I walked you through it. 1, 2, 3, 4. 1, 2, 3, 4. You've already got the 1, you've already got the 2, here comes the 3 again, and there's a number 4. There's a 1, there's a 2, there's a 1, a 2, a 3, a 4. I could go on and on, because it just does it over and over and over. Okay? Do you want to learn how to do this? Are you tired of buying every trading thing on the planet that's really complicated? You got to check 50 million different things. You got to subscribe to a million different data streams. You got to check high lows and advanced declines, and do you want to learn Fibonacci and Gann and Elliott? Those are very complicated studies, and if you want to do that, and if you spent time and money learning that, man, I am not knocking it. I spent years and a bunch of money learning Fibonacci, trying to make it work as a standalone trading strategy. It didn't fly. Okay? It didn't fly. It's not a standalone trading strategy. Is it a great confirmation tool? Yeah. Watch this. If I go to this swing low and go to that swing high, what's that? It's 38% retracement. But where's it at? It's right at my BBC. I can confirm it with the fibs if I want to, but I don't need to. I got this. I got this. I got this. So, anyway, I'd love for you to come and take the free trial. cfrn.net/apply. Now, when you come to this web address, no credit card. Don't need your mother's maiden name. Don't need to know the street you grew up on, your favorite pet, any of that foolishness, okay? All we need, your name, your email address. You're going to download this platform. You're going to install these indicators, and for 5 days, we're going to teach you how to use these indicators. You're going to have a simulator. You don't have to take our word for it. You're going to actually be able to put on and take off these trades, one after the other, after the other, after the other, okay? The end of 5 days, you're either going to be totally blown away, can't wait to become a partner, or you're going to go, wow, I didn't have time to focus, I didn't have time to concentrate, I don't think I can't move that fast, I can't think, or, you know what, I don't like you guys. Okay, fair enough. We'll part friends, all right, and we'll still invite you to come and hang out with us on the radio show every day. And if there ever is a time down the road when you do want to, get active in trading and you think you might want to become a partner, well, the door will still be open, okay? Because that's how we roll. We've been broadcasting now. We're moving into our 8th year of broadcasting. It's been a great run. God willing, we'll be here another 8 more. We're about to celebrate our 100th CFRN Partner Workshop. Along with trading every day live for 2 hours with the partners, every Thursday night at 9 p.m. Eastern, we do a community workshop, okay? And that runs 2 to 3 hours every Thursday night. Those are recorded, so once you become a partner, you have access to that video library, which currently has about 200, 250, maybe 300 hours of video in there, training video, that you'll have access to if you should decide to become a partner. But what we're doing to celebrate our 100th partner workshop, we're giving away an iPad mini. We gave away an iPad before, not too very long ago. By the way, if you've never gone to our blog, go there. There's just a ton of great articles. Well, I shouldn't say that because I wrote most of them, but they really are pretty good. And lots of charts and just great information. You know, if you're a trader, there's great information whether you ever come trade with us or not. But if you go to cfrn.net/iPod, where'd that page go? Oh. Hey, what happened? Something happened to my iPod page. It was just there yesterday. Oh, iPad. I'm sorry. It's late. I'm tired. It's iPad. If you go to cfrn.net/iPad, that's what we're giving away. We're giving away a mini this time. But the last time, Octavio Tovar from California, he won the iPad. Watch this video. This is how we reveal the winner. It's really kind of cool. Go watch it. You'll enjoy it. So come take the free trial, hang out with us, and if you take the free trial between now and the 28th of February, you'll be entered. Well, actually, this is for partners. The last time it was for anybody taking a free trial. If you take the free trial and decide to become a partner, you'll be entered to win the iPad mini. Okay? So, not much else I can say. I've said it all more than once. cfrn.net/apply. Visit us on YouTube, youtube.com/CFRN, youtube.com/Emini Futures Trading. Follow us on the Twitter, twitter.com/CFRN. We're on the Facebook, we're on the Pinterest, we're all over the internet. So come hang out with us, and I really, really, really hope to see you in the live trading room. Take care. God bless.